Welcome to Master Trader, where you learn simple market analysis to make money investing and trading in the markets. I'm Dan Gibby, Chief Options Strategist, and in this chart of the week, which I've labeled, would you rather get paid in 1 day or 43 days? Trading credit spreads, I'm going to address some of the many myths out there about trading short-term options, both buying them and selling them. It's actually one of our specialties when done properly and objectively using the Master Trader approach. Stocks can only do one of three things. Uptrend, which is higher high, higher lows, downtrend, lower highs, lower lows, or sideways trends, consolidations, relatively equal highs and lows. In this strategy I'm going to show you today about why we love selling short-term credit spreads over longer dated ones is because we get paid in a short amount of time through time decay and volatility, which I'm going to show you through an example. What we're doing here is we're looking for the compelling patterns, and we're just placing a bet, if you will, that the pattern is not going to violate the major support if we're selling a put spread or major resistance if we're selling a call spread. And we go to the option marketplace, only trade liquid options. I have to remind people of that every day. And in a bull put credit spread, we're going to sell a put under support. We're going to buy a further out of the money put. And the difference is our net credit. That's our potential maximum profit that we're going to earn if the stock goes up, like the chart suggests. The stock can just bobble around in a trading range, in a coma, and we still make money through time decay and volatility contraction. And it can even go against us, folks. As long as it enclosed below that short strike, that net profit is ours to keep. Bear call credit spread, exact same strategy, compelling patterns. We're selling out of the money calls over resistance, buying a further out of the money one. That's what makes it a credit spread, which spreads are better than naked because you have less potential max loss if the stock gaps violently or moves violently against you. And then also at your brokerage firm, it requires less buying power. So this cushion of the premium that we're selling, along with the charts, it gives us that edge, if you will, to be wrong. Everything starts with a compelling pattern at Master Trader, whether we're trading stocks, options, commodities, currencies, futures, anything. These are all beautiful pictures for this strategy I'm going to show you, selling put spreads. What we want to do is find support. We're going to sell that put option. Then we're going to go further out and buy another put option. The difference is the credit that is immediately deposited into your account. And then all we do is manage in between. Here's an example we did last week that I'm going to walk through to illustrate not only the strategy, but the importance and benefits of shorting options that expire in just a few days or even a few hours, if you will. Here's Amazon daily chart here on the left. This was a big, what we call inverse head and shoulders. It came down, 100% retracement, consolidating at resistance, price void. And this bar right there closed. That was if for a directional trade, that was your time to buy Amazon. So then on this particular day, it gapped down with the market right on this gap support. And then we drilled down to a smaller time frame to see if we have a potential bullish setup and a candidate to sell this put spread. 15-minute chart, you can see the gap down here. So 15 minutes after trading at 9:45 Eastern time, we have this bottoming tail range expansion bar. That is saying buyers are stepping up at that minor support on the daily chart. We then go to the option quotes. We decided that we want to sell under support for a very few days. On this one, the shortest available expiration was 1 day. On October 15th, so we sold the October 16th, 3195 put. We went $30 out, bought a 3165, so that's a $30 wide bull put credit spread on Amazon, and we took in $2.50 a share. This is the format that we send in Telegram to all of our subscribers, the Weekly Options Trader. It specializes in just selling credit spreads that expire 10 days or less for the reasons that I'm discussing right now. So there's a setup, everything has a stop loss. I hear over and over again from people who just don't understand. They say, Dan, why are you taking on $30 of risk only to make $250? I'm like, number one, because it's a high probability setup. There's a high chance that we're going to keep a big part of this credit. Number two, we always have a protective stop. The stop loss, the short put spread here was 31.95. Look at the day's low here, 32.80. It had a long way to go before we were in what we call the danger zone. So that's the position we put on. Let's continue with the management now. Managing and the Greeks. This was an adjustment strategy. So we were sitting in this all day long. These little blue dots, it's just the computer marking off major pivot lows. So that the low of the day, the 15-minute low, held. It made a higher low, it made a higher low, it had a bullish retest, it made a higher low with the 20 MA curling up. Beautiful, beautiful. This was a beautiful, actually, directional day trade. And into resistance, into strength, we sent out this adjustment. Let's close half at 55 cents a share and tighten the stop to the day's low under this horizontal line. We closed and made half and made 77% of our maximum potential gain in 5.5 hours, folks. If you are selling there's many services out there that say, danger, danger, don't ever sell short-term expiring options out of fear of gamma. Well, those people who believe that, they don't know how to read charts. So of course, that's their arch nemesis, is directional risk. Our expertise is combining option strategies with compelling patterns. Gamma risk to us is irrelevant. They like to sell 45-day expiring options and credit spreads because they say, well, it gives us time to adjust if the stock goes against us. That is a ridiculous approach. Anybody who doesn't look at charts in trading options, we think is an ostrich approach. You have your head in the hole of ignoring such valuable information. So theta over here, these are the Greeks that make up option pricing. Theta is how much options decay for every 1 day passage of time. Well, folks, just use common sense. If we're selling an option that expires in 1 day, theta expires very, very rapidly, like a melting ice cube, an hourglass, into expiration. Vega is volatility. So this Amazon gapped down, so that spiked up the price of these options that we sold. Remember, we're selling options to either option buyers or to market makers who just hedge it off. So as Amazon was just in this trading range for hours over the day here, we were making money, folks, through theta, time decay, and Vega, the volatility, since Apple didn't tank and take out the 15-minute low and keep selling off. This is volatility contraction. That's how we were able to book 77% of our max gain in less than 5.5 hours. One of my subscribers emailed this to me, and I loved it. This came right out of his email. And it's a popular claim that I get in teaching this strategy. They're like, Dan, I made money and the stock went against me. Yes, go up to 2 slides earlier, and as I said, it can go in our favor, it can chop around, or it can go against us, because if the gains from the theta, time decay, and volatility contraction outweigh the directional that might be going against you, you still make money. So that's him. This is an absurd strategy, sarcastic tone. I love it. You know, you and Greg, my partner Greg Capper and I, he's one of the pioneers of technical analysis. He's the absolute best in the industry at technical analysis, and we've been teaching thousands of people for decades, and we just love We love helping people and the positive comments that we get. But this trade on Amazon is one of our trades last week, and we had a very, very active week. This was actually a record number of trades for us. The weekly options trader is typically about 10 trade ideas per week. This brings our 3-week total to 54 of 56. Now, folks, for those, again, people who say technical analysis doesn't work, it's a coin flip, well, this is statistically impossible. 50-50 is a coin flip. 54 for 56 is an amazing track record. And it's because of the edge that exists in our approach of selling options using the charts, the master trader method. This is the last of the management now. So remember, we entered on this bar. We're making money as it's going sideways. We covered half into resistance, and we held half because it expired on 10/16. See here? That's the expiration date. As long as Amazon closes above 31.95, then these put options are worthless, and we make 100% of our money. However, the master trader approach, similar to a risk insurance salesman, think about this, folks. If you were working for an insurance company, you have more risk selling a 1-year policy, health insurance, car insurance, whatever, versus a 1-day policy. Your risk is much less, and we're getting paid handsomely for that short-term risk. So this is a 15-minute chart again. So into what we call the morning 10:30 reversal period, it continued to rally, then it started to sputter. I sent out a Telegram alert. I was trying at this time here at 9:53, so approaching the 10 a.m. reversal. I said, look, folks, you can close this at 13 cents a share if you want. I said bid 3 cents because I was trying to just squeeze another dime of potential gain out of this trade. And additionally, I make it a practice just closing out options because there still is assignment risk, even if it closes out of the money. If the option holder calls the broker for whatever reason, post-market moves, whatever the reason, and you could be assigned over the weekend in accordance with the contractual obligations of the short option. So we didn't get our 3 cents. I saw it sputtering a little bit. I said, folks, take a nickel. So we closed the back half at a nickel, and we eliminated the remaining 5.5 hours of the market day. We're done with it. We're done with this trade. Like a bus, we're just off to the next trade. And we booked 98% of our maximum gain. And if you take that gain divided by the capital required at the brokerage firm, which is the spread width less credit received, 8.7% return on capital in 1 day. And we had the big cushion to be wrong. So I hope that helped illustrate our approach using the charts and why we love selling short-term expiring options because of that time decay and volatility contraction. If you want to learn how to sell these credit spreads, we have 2 amazing courses, an advanced credit spread course and a mastering course. It was a very detailed 12-module course. And you can even start here and upgrade. 99% of the people do the upgrade. And then we have this combo here. We get 3 months of our live trading room where we find these trades in real time with our... And then the weekly options trader is where if you just want the Telegram and email alerts of these trade setups with updates, as I showed you, then you can just sign up for the weekly options trader alone if you like. Go to mastertrader.com/spread trader. Any questions, feel free to email me, dan@mastertrader.com. Good trading, and we will see you in the next video.